Hey traders, this is Christian from Market Trade Group, and this is your end of day as well as your end of week recap for Friday, June 18th. First disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for information purposes only. The video is for education purposes only, and if the screen is a little bit fuzzy, just give it a little bit more time. YouTube does take a little while to go ahead and render the high def version of the video. So just give it a little bit more time if the video is or the screen is blurry. So let's we could go through the through these numbers here just for a second here. But the Dow finished down 1.6%, S&P down 1.3%, NASDAQ also down 1%. So pretty much right across the board. One thing that I noticed when we came in this morning was that Europe was also down pretty decently. When we came in this morning, Europe was down about 1%. I was wondering why the S&P was holding up so well. Usually we do follow Europe. I know there's a lot of traders that are very focused on the U.S., but in my experience, it's a global economy, and when Europe is down a lot, we usually follow that. So I'm not saying that was the cause for the move, but usually when they're down a lot, we do follow, and that was one of the things that we really started to kind of move down decently, along with there was one of the Fed governors who had an interview on TV today that said some hawkish things. But I'll tell you, the main takeaway that I get from that is it seems like this market is reacting pretty decently to bad news, right? And good news, the market isn't really moving too much on. So that to me is just kind of an indication of sentiment, right? Whenever we hear anything bad and we the market really sells off, it just tells me that the sentiment is too high. What you typically want to see is when there's some bad news on the tape and the market actually doesn't go down too much, right? Then you know that there's a decent amount of bad news priced into the market and it's a little bit more resilient. Right now, we're not in that stage of the market. Anything bad seems to be inflicting some pain, on the market, regardless of who's saying it, regardless if it's a Fed governor who's not even a voting member of the Fed. But that's just, to me, what the market is telling me, right? And, again, watching price, watching trend, these are the most important things to me. And we can kind of go from there. But yeah, let's talk a little bit more about one of the other things that really stood out to me for the last couple of days was market breadth. Even yesterday, if you remember in yesterday's video, I talked about this. Even though growth names outperformed, and if you caught some of those names, what I said yesterday was congratulations, because the market breadth was not good yesterday. Today, even worse, right? So that's a deterioration that we've got going on. Take a look at the Dow, right? There's 30 names in the Dow. I'm chuckling a little bit because it's ugly. It doesn't get much worse than that. All 30 names down. Look at the S&P, 52 names up. 453 names down. I kept saying that in the trading room today. I'm like, guys, this is a very weak market today. So, when that happens, I try not to overtrade. That's the goal. I try to trade less, and I try to just really follow what the market is telling me. NASDAQ, over 2,100 names that were declining and only 700 names that were advancing. Now, this is not what we've had over the last couple months, right? That's one of the things that's kind of kept me in this market. When we look at the advanced decline line, right, which is won't be updated till later, but take a look at this, right? So this has been in this nice channel. I would assume after today, this is going to be also below the 50-day moving average. So typically what I normally look at the advanced decline line kind of shows under the hood how strong, how much participation there is in the overall market. And it's, I want to see whether it's confirming or diverging. Well, it hasn't really been diverging, right? But it's confirming right now. So what we're seeing is, let's talk a little bit about the S&P chart here for a second, is we broke the 50-day moving average, right? So we're seeing a move down in not only the price, but we're also seeing a deterioration in breadth, right? So those things are kind of equaling, right? They're confirming one another, right? We're seeing weak price action. We're seeing weak participation, which is what we saw yesterday too. So, again, you kind of just have to say right now there's some distribution going on. And typically what that means to me is to reduce positions, reduce position size, reduce the amount of positions, right? The other thing, this is a very simplistic analogy too, right? But if you're holding a lot of positions, right, and let's say that you're holding not just one area of the market, that's did well the last couple days, which is software names held their own, growth names did very well. But let's say you're holding a bit of a diverse basket, right? You're now basically the analogy that I use sometimes is you're basically swimming against the tide, or the wind is in your face, not at your back, when you have declining breadth as what we've had this week, right? So it just makes it that much harder to make money in the market, right? Unless you're just day trading, right? And that's a whole nother conversation. But most people, are holding positions, and if you have, this type of declining, breadth. The way that I look at it is very simplistic. If you have 10 positions and you have this type of breadth, you may have 7 positions that are going down and 3 positions are going up. So you could cheerlead about the 3 positions that are going up, but really, for example, Twitter. But that's just the way it is for market breadth. Is that you're going to have the majority of your positions are going to be going down. Now, if you were skewed, and you're managing positions a little bit better, and you're holding more winners, then I would say, that's awesome, right? You're doing very well, because you're picking names that that are showing up positively, right? That are outperforming and showing upside momentum to them. But it's very hard to do, right? That's not easy to do to beat the market in that fashion, right? All right, so that's kind of the main things that I'm seeing. And the other thing that I'm seeing is, we've seen certain areas of the market really get beaten up. Metals and mining, right, have been correcting. The financials have been getting hit. The industrials have been getting hit. The materials are getting hit, got hit this week. So again, this is really a lot of breaking down. Now you could argue, okay, well, it's growth that's going up, but sooner or later this kind of catches up with the market, right? So this is growth, which is moving higher. But I'm starting, another area of the market that I thought was particularly weak today was the semiconductors, right? So it's kind of spilling over to some more and more areas, right? When you have all those sectors that are moving down, again, you have weak breadth, and sooner or later that seems to want to catch up with the market, in my experience with the overall market. So things that I would watch for next week, right? I would watch this bottom of value. Right, so we did break the 50-day moving average. Note that this price action has been kind of, getting itself basically pinned into a corner, because there's been a rising 50-day moving average and the price action has not been going up the same. So it was kind of inevitable, if we weren't going to break out further, that you might have this break of the 50-day moving average, which you have here. So next level down, I would say is 4116. All right, and a lot of, I don't want to say a lot of this, but part of this volatility was quadruple witching, right? There's a lot of things that go on in quadruple witching, big volume, and just about every name due to the S&P and Nasdaq rebalance. So is that going to, being that event is a one-day phenomenon? I don't know if that's going to straighten itself out come next week, because really, this market was weak pre-market, and the breadth, I think, is just indicating that there's some other things going on right now. So it's something that we'll have to watch. So that's a level that I'll be watching next week, right, is 4114. That's another 30 handles down. I would say one small positive is we took out another one of these virgin point of controls. Now, we're not stopping here, so that's not the best sign. What we normally want to see is this, right? A takeout of virgin point of control, and then a rebound. Note one thing that I said yesterday when we did rebound, it wasn't very strong of a rebound in the S&P. In fact, we could not get into value, and I pointed this out in yesterday's video. So there was your rejection point. We started to go lower pre-market and just continued to go lower. And yeah, one of the things that I said in the room was that this is, today I made a couple comments about it, and usually I don't do that, but I said, hey, this is a very weak market today. So I said, be careful. I know some things, right, are doing this, right? Docu, up again, right? So again, it's a very odd market right now to see something like this, right? A Docu up, this much. Nvidia was up, but Nvidia did give back the gains, right? After this thing has been absolutely on fire, but yeah, I mean, I even though we're seeing, a lot of these things go like this. I like this. I traded this fever today, which worked out pretty well. But I don't know how much further the growth can kind of carry the ball without the rest of the market participating, right? Again, slim, narrow breadth is not a very healthy market. So we'll see how this shapes up next week. What I would like to see is some dip buying going on in some of these beaten up areas. I didn't talk about bonds yet, but what a move. Another up 1.9%. So, that is why you're seeing such a peeling off of, getting out of financials. Remember, they're very interest rate driven, right? When you have big moves like this, there are going to be, some actions that take place, right? And I do think that a lot of this move that's happening in rates right now from where we were just a couple days ago is partially model driven, right? There are a lot of quant funds that say, hey, this is what the yield is. Okay, we need a little bit more, if yields are going down, right, as they are on the long end of the curve, you're going to say, people are going to say, hey, I don't need these financials as much, right? The yield curve is not as steep as it was, right? That's when there's a really good environment for banks, when the yield curve is steep, right? Not when it's flat or downward sloping. So I think that's a very mechanical trade going on right now. So again, just kind of have to let this play out a little bit, but it is now moving up, just the last couple days. It's moving up faster than it was declining, back in the beginning of the year. So just something to take note on. Somebody asked me earlier in the trading room, well, what does that mean when bonds are going up this much? Well, it could mean a couple different things, but I view it right now as risk off, right? As a flight to safety. Right, people are running into bonds, and again, perhaps that was a little bit of the even though bonds are not part of the S&P rebalance, right? There's no bonds in the S&P, but perhaps this was a little bit of rebalancing that was taking place, because look at the volume too, the last couple days. All right, so that's the story there. VIX. Also moving up back above 20. Note that I would say one positive thing here is you still don't have, a move out of, and again, I don't want to analyze the VIX chart too much, right? We know that skew has been very high, by the way, but, right now, and again, it's kind of the first big green bar, so we'll kind of have to let this, see how this shakes out. But right now, we do not have a higher move above these peaks, right? It's the one thing that we've been talking about over the last few months is every time we see one of these episodes of volatility, each one seems to be lower than the previous one. So, yeah, we'll see. Right now, it's not severe. So we'll keep an eye on that. And, if we get back above, let's say, if we take out this peak of 27, then I would say, hey, we have something more structural going on. Then, what we've talked about a couple times this week, which is we are in a weak seasonal period of the year. A 2 to 5% correction should not be surprising to anybody, right? Given what time of year it is, and that usually you get a couple of those episodes of volatility a year. So put it in perspective and realize that the market goes up and it goes down, and June is not an easy time during the market. Also, the other thing that I've had in here, which I think I must have taken it out, but the second half of the months have been a lot more difficult than the first half of the months. So that's a couple things I think to ponder a little bit, and to kind of take this in pace, right? This was not a good week for me, but I really don't want to press here, even though like everybody's first instinct, I think, as traders is when they lose a little bit of money, they want to get aggressive to get the money back, right? I don't think that that's the right tact to take right here. I think patience is important, right? You might get some really good buying opportunities. Obviously there's been a lot of things besides growth that have come in, but I think you have to wait. You have to let these things go where they're going to go first. And I'll talk about a couple of these things. So, for example, a couple of things that I'm looking at. Deer. Now, there's a virgin point of control down here at 315. I don't know. That could be where we're getting to. Notice that the price is below the 5-period moving average. So you have no confirmation yet that the bottom is in here. That's why I have these on my charts, right? Some people ask me sometimes, hey, why do you have the moving averages on the charts? They're really not helpful. Well, to me, they are, right? They tell me what the trend is. And what I would want to see is a move back above the 5-period moving average. At least is some confirmation that the heavy selling pressure is over with, right? But you could follow that along, right? This helped me a lot when we had the sell-off that happened, over a year ago, right? I've gone through this illustration before, but I'll do it again. When this was taking place, right? Notice the price action could not, just over here, try to fight through this, but very weak, right? But it stayed below the 5-period moving average. Basically, the whole move down. You had no confirmation. I had a bunch of people who were telling me, oh, this is a great buying opportunity. 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 But I'll tell you, it didn't. Once price got above at least the short-term moving average, you had something there, right? So you have to be careful of that, of jumping in too soon. If you jump in too soon without confirmation and you're just using your emotion, right? Or, you're thinking that it might be over, you have to be very careful with that. That's usually where losses can really pile up and you're digging yourself a hole. Another one that I'm watching is SHW. Whoops. Right? This was one of the strongest companies. Deere, Caterpillar, these things were really strong, but the trend is broken. Right? So it's another one that I'm watching. You have a VPOC down here at 263. Right, which could get taken out, and I think that would be a place that I would look for a reversal once it's taken out and once the price gets above the short-term moving average. But one of the things that I noticed too is, a little bit of, trying. It's trying here to put in a bottom here, right? One of the things that I look at too is RSI divergence. Now, this isn't, this really wasn't an official new low. I guess the bar close, you could say. So you do have an RSI divergence, right? Here was your low in the RSI, but this new area down here did not create a new low. So we'll have to see if that puts in a short-term bottom, or it could be a false signal. So that's something that's one of the names that I'm watching. And again, I wouldn't be surprised if it goes down a little bit lower to take out that virgin point of control from back in here. So those are a few names I'll be watching. And again, I think if you're patient in here, you might get some good buying opportunities. But remember, the more patient that you could be during these sell-offs, usually the better you are at the end of it, right? And if you're finding names that are still going up, congratulations to you, right? And if you're making money on some of those plays, right? A couple names, Crowd has been very. You look at Crowd and you would say, what correction was there, right? So again, some of these things are acting really well. MDB is another one, right? That is continuing to move higher. All right, but I'm guessing that some of these things are probably going to consolidate, a little bit. But we'll see. I could be wrong too. So, for now, we'll kind of watch how some of these things go. FV Fiverr is one that I played today. I always show my trades, right? So this was not stellar. Getting stopped out in some things today and abandoning some things. But you could see this. Even though there was volatility today, I didn't trade much. Because I didn't like the market breadth, right? And when I see signs like that, I just take the foot off the accelerator a bit. Even though I think that there were some really good scalping, opportunities today. But you got to be quick. You got to be super quick with this stuff. The other thing too is, as we get into next week, if the volatility stays heightened, right, you could possibly scalp a little bit more. But you got to remember to kind of take off the positions at the end of the day when you have this type of horrible breath that you have. All right, and just here's the performance for the week. So I know it's kind of a negative. I'm a little bit negative going into next week just because of what I saw on the tape today. So we'll kind of just observe how this goes. And yeah, we hope that this will, if you can kind of see it through, you'll get more buying opportunities. All right. So best performers for the week. You could see SPY was down 2.2%, IWM was down 4.3%, Qs were just barely green for the week. There's the big move in bonds. Gold, international markets were down a lot. A lot of that had to do with the stronger dollar because you are essentially short the U.S. dollar if you own things like EFA, EFA, or EEM. Right? They do have a currency component because the names that they own, most of them are listed in non-U.S. currency, so therefore you have a synthetic short position in the dollar when you're long international ETFs, unless they actually say that they hedge out the the currency. So that's the dollar. We talked a little bit about this, I believe, in yesterday's video, right? And you got to push back in here. Speaking of a bullish divergence, look at the RSI improve, right, on the dollar. So I don't know. We'll have to watch to see if this dollar, continues to get stronger and stronger. All right, guys, that's it for today's video. Again, here's some of this nasty price performance or price action on the right side of your screen. XME was down 12%. So again, a lot of things got hit a lot harder than the areas that went up. All right. Have a great weekend, everybody.